Ever pondered what course of action you might take if a surprise financial crisis comes your way? If the answer is no, then it's time you did. Life, as we're all aware, is a fickle mistress. One moment everything is going according to plan, and the next, an unforeseen financial hurdle is tossed into your path. It may take the form of an unexpected job loss, a significant car repair, a health crisis, or even a worldwide pandemic that brings life as we know it to a halt. These unpredictable incidents often entail unforeseen costs that can throw your financial stability into chaos. This is where the significance of an emergency fund becomes evident. Fundamentally, an emergency fund is your financial safeguard. It's a pool of money specifically saved to help you the financial twists and turns that life throws at you. Imagine you're traveling on the financial highway and suddenly you encounter a financial pothole, a large unexpected cost. Lacking an emergency fund, this monetary hiccup could wreak havoc, making it challenging for you to regain your financial footing. However, with an emergency fund, you're ready. This fund enables you to manage unexpected expenses without disrupting your financial progression. An emergency fund also gives you the reassurance of knowing that you can tackle these financial surprises. It's akin to a financial umbrella that protects you from the downpour of unexpected costs. You're spared from the anxiety of having to borrow money or accumulating credit card debt to manage these expenses. You can handle the situation without the added burden of figuring out the source of the funds. Not to mention the sense of financial autonomy and control that an emergency fund provides. It allows you to make decisions based on your best interests, not just your current financial standing. In conclusion, an emergency fund is more than just having money in your bank account. It's your financial lifeline, a source of peace, and a path to financial autonomy. Thus, having an emergency fund is not a choice, but a necessity. Now let's explore how to start building one. The first step in building an emergency fund involves setting a goal. But how much should you aim for? A question that often comes up when embarking on this financial journey. Well, let's delve into it. The general rule of thumb, widely accepted in the world of finance, suggests having 3 to 6 months' worth of living expenses tucked away in your emergency fund. This amount is aimed at covering any unforeseen circumstances, such as sudden job loss, unexpected medical expenses, or urgent car and house repairs. It's essentially your financial safety net, a buffer between you and life's unpredictable turns. But remember, this is just a guideline. The actual amount you should aim for can fluctuate based on a variety of personal factors. Let's consider a few of them. Security, for instance, plays a crucial role. If your job is less secure or your income fluctuates, you might want to aim for a larger emergency fund. Similarly, your health status can influence your emergency fund goal. If you have a chronic condition or a history of frequent medical needs, a larger fund might offer that extra peace of mind. Also important to consider your overall financial situation. Do you have other forms of savings or assets you could tap into if needed? Or are you starting from scratch? All these factors will help shape your emergency fund goal. But here's the crucial part. Your goal must be realistic and achievable. It's better to start with a smaller, manageable goal than to aim too high and become discouraged. Even a small emergency fund can make a big difference when you need it most. That brings us to the most important advice of all. Start. Whether you're saving $100 a month or $1,000, every bit counts. It's the habit of saving that matters most, not the amount. Remember, the key is to start small if necessary, but start nonetheless. Because the journey of 1,000 miles, or in this case, the journey towards financial security, always begins with a single step. Once you have a goal, the next step is to create a savings plan. But where do you start? This question has probably crossed your mind more than once, hasn't it? Well, worry not, because we're about to demystify the process for you. A savings plan means setting aside a certain amount from each paycheck. Now you might be tempted to think that you need to set aside a large chunk of your income, but that's not always the case. Small, consistent savings can add up over time. Key here is consistency and patience. Rome wasn't built in a day, and neither will your emergency fund be. Of it as a journey. You're not sprinting to the finish line, but rather taking a leisurely walk, enjoying the scenery along the way. Step you take, Each penny you save is a step towards financial security. So whether it's $10, $50, or $100, it doesn't matter. What matters is that you're making a conscious effort to save. Now let's talk about making the process easier. How about automating your savings? Yes, you heard that right. Many banks and financial institutions offer the option to set up automatic transfers from your checking account to your savings account. This way, you don't have to remember to transfer the money every time you get paid. It's done automatically for you, of sight, out of mind, right? Plus, it eliminates the temptation to spend the money on something else. Remember, building an emergency fund is not about depriving yourself of the things you love. About securing your future and giving yourself the peace of mind that comes with knowing you're prepared for whatever life throws your way. Set your goal, create your savings plan, and start saving. You might surprise yourself with how much you can save when you put your mind to it. With a solid savings plan, you're on your way to building your emergency fund. That, my friends, is a journey well worth embarking on. You have your goal, you have your savings plan, but where should you store your emergency fund? This question is as crucial as establishing the fund itself. All about location, location, location. But in this case, we're not talking about property, but the best place to stash your emergency fund. And there are several options to consider. You might think about a high-yield savings account. It's an excellent option because it offers a higher interest rate than a traditional savings account. It means that your emergency fund will grow over time, even if just slightly. Remember, every penny counts. Also, these accounts are federally insured up to $250,000, providing you with a layer of security. Another option is a money market account. Similar to a high-yield savings account, it offers slightly higher interest rates. However, keep in mind that these accounts often require a higher minimum balance. Could also consider a short-term certificate of deposit, or CD. It's a time deposit with a bank or credit union that offers higher interest than a regular savings account. But there's a catch. You'll need to commit to leaving your money in the CD for a set period, which could limit your access to the fund in an emergency. Now, whatever option you choose, it's crucial to keep your emergency fund separate from your regular checking or savings account. Why? Because it's human nature to spend what we see. If your emergency fund is mixed with your everyday money, it can be far too easy to dip into it for non-emergencies. Remember that your emergency fund should be easily accessible. You never know when you'll need it, and the last thing you want is to be unable to get to your money quickly in a crisis. The right home for your emergency fund is crucial to ensure it's there when you need it. So take the time to explore these options and find the one that best suits your financial circumstances and peace of mind. Building a USD emergency fund might seem daunting at first, but remember, every large journey begins with a single step. So let's take a moment to revisit what we've explored today. We kicked things off by discussing the crucial role of a USD emergency fund. It's more than just a safety net. It's an essential tool that provides financial security in USD, allowing you to navigate unexpected expenses in USD without plunging into debt or dipping into your USD retirement savings. A USD emergency fund is your buffer against life's unforeseen twists and turns. We then delved into the initial step you should take towards building this fund. It all starts with setting a realistic goal in USD. How much do you need to save? Well, a good rule of thumb is to aim for about 3 to 6 months' worth of living expenses in USD. This should give you a solid base to withstand most financial storms. Once you've set your goal in USD, it's time to create a savings plan in USD. Remember, this doesn't have to be a Herculean task. Start small and increase your savings as your financial situation improves. Automate your savings in USD if you can. Make it a part of your monthly budget, just like rent or groceries. The idea is to make saving a habit, not an afterthought. We also discussed where to keep your USD emergency fund. It should be somewhere easily accessible, yet separate from your day-to-day bank account. Consider a high-yield savings account or a money market account. These options not only keep your money within reach, but also allow it to grow. In conclusion, the journey towards financial security in USD may seem long and winding, but each step you take brings you closer to your goal. Building a USD emergency fund is not a sprint, but a marathon. It's about consistency, not speed. Start building your USD emergency fund today and secure your financial future, because it's not about if an emergency will happen, but when.